significant non-cash activities. So sometimes you may have something that happens, like you issue stock in exchange for property. Does that affect cash? It kind of bypasses cash, but it's a significant activity. These items have to be reported. They're usually reported at the bottom of the statement of cash flows or in the notes to the financial statements. So examples, purchase of assets by issuing stock. Converting bonds, I should say, into common stock. Okay, so these aren't directly impacting cash, but it's almost like they're bypassing cash, right? You could issue stock, get cash, and then buy assets. You could sell you could sell your bonds and then purchase common stock, or purchase bonds and then issue common stock, I should say. Or you may exchange long-lived assets. You may exchange one property for another property, which you're kind of bypassing. You could have a property, sell it, and then buy another property, or you can just do some kind of like-kind exchange. So these are areas that have to actually be reported. So they're considered significant non-cash activities. And they're usually reported at the bottom of the statement of cash flows. They're not part of the statement of cash flows because did any cash change hands? No, so it's not incorporated into operating, investing, or financing. It doesn't come into your bottom cash number, but they're reported in that same area, generally, or in the notes. So I just took this out of your book. Presentation of material non-cash items. So if this was the end of a statement of cash flows, you might, right below that, have non-cash investing and financing activities. And this information is reported. It doesn't tie back to your cash balance. It's just giving significant information. Okay? Another way of presenting it would be a note in the financial statements. Same thing. Okay? All right, so let's look here. Let's try classify as operating, investing, or finance.